Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we had quite the day yesterday. It was a huge rebound. If we go back to the overnight action in the S&P, we traded down to 36.56, and we saw this rebound start in the aftermarket and just continued into the open and then rallied throughout the session. And what we saw was about 115, 125 point rally from the lows of the overnight session. Now the cash markets look a little bit different. I'll go through a lot of details in the technical section, but we definitely had a big reversal day yesterday. And as I talked about, I'm looking for a 5-3-5 type pattern, but that is going to be very dynamic because it now looks like the entire dialogue of what we were operating on, which was the whole short squeeze, was going to cause some sort of liquidity issue and markets were going to collapse. We got an STX buy signal on our technicals. I knew that we would get 2 to 3 days of upside. Did not have any clue that we would move as much as we did last night. But as we look to today, there's absolutely zero economics coming out. There's no economic reports, and it's all going to be about earnings, but the big reports will be out after the market close. So those effects, Amazon and Google, will be out after the close. So those effects won't be felt until we see the opening on Wednesday. So the good news is we'll be doing a live stream, and I'll have an opportunity to talk a lot about what's going on in these markets. But it looks like risk on is back. Everything is better again, and everybody's buying the dips, and we're seeing this frenzy go on. The interesting thing is, as you'll see in the technicals, we're not really seeing the VIG come back in the market. We're not really seeing the momentum turn around. So we're still in this corrective phase, and it's going to take a while to work through this. But as we go through this week, it's going to become more and more about fundamentals. It's going to become on Wednesday about the ADP report, and then continuing claims and the claims numbers on Thursday, and then ultimately the employment situation on Friday. So markets are going to get back focused to that, and especially if we don't see any weird things going on with silver and GME or any of these other stocks. Now, tonight's report, I will cover silver again. I'll go a little bit more in depth. The patterns are pretty sloppy there, but I'll go ahead and cover that so we have a better context, at least, of what's going on with that market. So let's go ahead and dig into the charts, see what they're telling us for Tuesday. As I begin with the WaveTech Database, we did see some buying after yesterday's rally. Not a lot, but we did see about 700 new buys and about 220 new sell signals. So we had a bullish ratio. We upticked just a little bit from 27.2 to 27.42 on the bullish percent. And as I've discussed on this database, it's going to take a while to recover after selling off. I did also suggest that the targets were between the 28% bullish to the 22% bullish. And if we can continue to get some stability over the next couple of days, it's possible we could see some stabilization. But the short-term trends, make no mistake, have been blown up and are suggesting that we're going to be locked into a trading range. Now, that does not mean that we can't continue to rally over the next couple of days, as I mentioned in yesterday's commentary, but there is some limitation to what we're likely to see from this particular configuration. The database will have to get back above 42% to get back into a minimal trending mode in the market. So we're going to have to do a lot of work. I still expect to see a couple weeks of work, before we'll be able to actually restructure this market and see if we will get any further declines, both in the database and the markets themselves. As I begin with the S&P, looking at the futures, we are up 21 handles overnight. We're trading at 37.87. And as I mentioned in yesterday's commentary, I thought we'd get about a 3-day rally up toward the moving averages back into that range. And this is exactly what we've done so far. This is day 2. And we had that monster reversal yesterday, more evident on the futures than the cash, as you'll see here in a minute. But that spike all the way down, that spike down to 36.56 overnight was significant and did set up a pretty substantial reversal bar. If you notice, on Friday, we had a high of 37.77 and a low of 36.85. Yesterday, we had a low of 36.56 and a high of 37.77. Equal the highs that we saw on Friday. We did not technically get an outside reversal bar, but we're trading into these moving averages now. Overnight, we're seeing the key averages at 37.85 and 37.99. So all of a sudden, back to 3,800. What we're seeing here is the market grid reflects also that R1 is a 37.92 level. That's been the high overnight. So we've already printed R1. If we print R2, that'll put us all the way back up to 38.21, and we go back to the highs of this market. That's back at 38.62. So all of a sudden, we're trading right back at those highs. As I mentioned in the opening comments, we are seeing basically all risks back on. All of the risks that we thought were existed in the markets were eliminated, i.e. the GME trade and the squeeze going on, and all of the emotion that was created around that sent the markets sharply lower on Friday, only to see them rebound as everybody started to understand that that we went to an extreme all of a sudden. I had thought originally if we closed under 37.35 that we would see a further decline, and we did do that on Friday, but the reversal that we saw last night had to be respected. It was obvious we'd get at least 2 to 3 days up, which is still my expectation, and there'll be some key numbers that I'll be watching to make sure we don't violate any of the retracements suggesting that all of a sudden we're back into an all-time new high again. These markets are very dynamic and very powerful just due to the amount of participation that we have. We were actually down about 13% in volume on the exchanges yesterday at 8.8 billion. The other day we printed 14 billion shares, and that was the most that we had ever printed in the history of the stock market. So we're seeing extreme participation at these levels. Let's go ahead and take a look at the SPX. And as I mentioned, we did not get the drastic sell-off for the lows that we have. So we were able to penetrate Friday's high. Friday's high was 3778.05. And we look at yesterday's high was 3784.32. And we closed at 3773.86. So we almost closed above Friday's highs. So this is quite the reversal. And we look at the market grid for tomorrow, we're going to see that R1 is 37.90. Looks like we're going to try to print that early in the morning. R2 is 38.10, and the R3 is 38.29. So I would expect to see, worst case tomorrow, S1, R2 on the cash markets. If we look at the weekly chart, I also talked about the power in this 10-week moving average. It continues to be a demand line. We closed below it on Friday, but the average was still up. 37.45 is that number, and PPM1 is at a 0.36, which is a bullish or in trend mode to the upside. So that number is going to continue to keep this market somewhat in a bullish tone. If we look at the PPM2, it's trying to penetrate through its first and second derivatives. So this is nothing more than a minor correction I had talked about the potential of going down into the 35 handle, 3570, 3500. It appears that probability is dissipating very quickly, and we're likely to see several days of sideways moving up toward 3820 and staying above 3750, 3745, which is that average. And so we'll have to watch this very closely over the next couple of days. I also suggested in yesterday's video it was possible that we could see some type of failure coming into the employment numbers on Friday, maybe starting on Thursday's claims numbers and moving forward. We do have a substantial amount of earnings reports coming out on Thursday as well. So there's plenty to drive the markets into further volatility before we get through this week. As we go through the NASDAQ futures, we see that they are rebounding back above the 10-day moving average. We saw a huge reversal, and we did get a clean outside reversal bar on the NASDAQ. And I'll talk about this in more detail here in a minute. But Friday's range was 13,188 to 12,129. Yesterday's range was 12,727 and 13,271. So we clearly saw a reversal pattern. We also were able to close above the highs of Friday at 13,236. We're seeing some pretty decent follow through overnight. We're at 13,329. And as we look at the market grid for today, you're going to see that R1 is 13,346, so we've been just above that. So look for an R2, 13,468, and the possibility of an R3, 15,590 as we work within this grid. As we look at the PPMs, they're not necessarily very robust, but they are in trend mode as PPM1 is now turned up to 0.26. Looking at the weekly chart, we're seeing basically a bounce off that 10-period moving average. I thought we might get through that and trade down a little bit lower, but that was one of the key levels that I discussed. That is at the 12,869. Yesterday's low, 12,727. We look at S1 on a weekly, 12,767, and we basically bounced off of that number and reversed to move up toward the R2 number, 13,216, and we've actually penetrated that. So now R3 to an RTX number is possible on the NASDAQ this week. It's likely that we will see some flattening out, but the weekly we're seeing PPM2 is actually crossed through its first and second derivative. That does not mean this market is ready to break out just yet. I still think there'll be serious resistance up here at R3 and the RXT number on a weekly basis on the NASDAQ. Next market I'll cover is silver. As I was discussing in last night's video, we were up about 6.5% when I was doing the video. We did trade up over 8%, and then we saw it fade off of the highs, and we did get an RTX sell signal, and we're down about 2.39% overnight right now, and we should see further sideways movement for at least 2 to 3 days. And as far as this short squeeze goes on, this pattern is not that bullish, and I'll show you on a weekly basis. While I know a lot of folks are playing into this, I'm not sure it's going to be the same play as the GME and these short squeezes. There's a lot different set of players in this market than there was on GME or AMC or a bunch of these short stocks that people are heavily short in. We're not going to be able to see any type of squeeze like that. So let's take a look at the weekly graph here and just try to get a sense for maybe some targets and those type of things as far as the upward pattern goes. Now we exceeded through the RXT number 29,175, the high 30.35, and we closed back below it. R3 is 28.64, and we're trading right around that R3 number right now. My expectation is that we'll see some further backfilling, possibility of 27. Still think we'll see back at 26.38. I just don't see this thing popping out here. The positive part of this market is that PPM1 is now up at 0.2.43. It is a very powerful pattern, but that average is at 25.74, and I think we're going to come back and test that somewhere between 26.40, 25.78. We'll come back into this. I don't see it breaking out here. All of the PPMs, 1, 2, and 3, are in trend mode and slicing through their first and second derivatives. This is overall positive. Major resistance between 28.64, 29.17, and now with the print high yesterday of 30.35, that will be a number we'll have to watch over the next couple of days. But I would look for some further weakness as we come into tomorrow. I'm still looking for a 26.40, 25.80 type retracement before the market will try to go higher again. The final market that I'll cover tonight is the gold. Gold is backfilling a bit too, down only 0.32 at 1858. Yesterday, we did manage to trade up into some resistance right at the 1875 level. We had a high of 1878. It reversed back from there and closed at 1850. So we're starting to see some retracement here, and I suspect that we could see an S1 number. 1837 would be the low, so most likely an R2 S1 number is likely today. Now, we're not really seeing any major action in the Dow, which is one of the driving forces around gold, and we're seeing it backfilling a little bit, but the market is ignoring the weakness in the Dow for right now. I don't think unless the Dow breaks out of its current pattern that it's going to have much effect either way in gold. As we review the daily chart, you'll see that we traded just above those numbers that I talked about last night, above the 21 and 40 moving averages. The high yesterday, as I mentioned, was 1876. We pulled back from there. We're right back to the 10-period moving average right now, 1857. Penetrated that. We should see an S1, maybe an S2 out of this, 1848 on the downside. These metals look like they're going to weaken from here, both gold and silver. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.